Welcome to Talk Tickers. You're here for a deep dive into the Tesla Q1 2025 earnings call. We're aiming to give you the key insights, the stuff that really matters.
Yeah, so Q1, it was, seasonally it's always a bit slower, winter conditions and all that. And we did see vehicle deliveries dip sequentially.
Right, and the main reason was those planned factory upgrades for the Model Y.
Exactly. They did it across all the global factories pretty much simultaneously. Quite a big move, really.
Yeah, that's a huge undertaking. But while the car side dipped, the energy storage business, that actually hit a record gross profit.
They did, yeah. Megapack's doing really well. But back on the auto side, margins did decrease.
Okay, so why was that? Lower deliveries, I assume.
That's a big part of it. Lower deliveries mean absorbing those fixed factory costs over fewer cars, plus lower revenue from regulatory credits.
Got it.
It wasn't all bad news for margins, though. They did get a slight offset from slightly higher pricing on the new Model Y.
Okay, and what about spending, operating expenses?
Those went up compared to Q4, mostly driven by investments in, the future stuff. AI, Optimus the robot, Cybertruck ramp, and those cheaper models they keep talking about.
Right, the long-term plays.
Yeah. And one other thing on the financials, other income dropped quite a bit. That was mainly a Bitcoin thing, a mark-to-market loss based on accounting rules.
Ah, okay. Despite some, let's say, negative press, it's worth noting Tesla was still the best-selling car in California in Q1. Not just EV, but overall.
That's a key point. And they also mentioned a record number of global test drives. So, underlying interest seems strong.
And the timeline for the more affordable models, still this year.
Still planned for this year, yes. Though they hinted the ramp-up might be maybe a bit slower than initially hoped. Industry turmoil was mentioned, but not blocked, just potentially slower.
Okay. Let's get into some specifics from the call. Elon Musk talked about his government work, right? The Department of Government Efficiency, DOGE.
He did spend some time on that. He framed it as, critical work to cut waste and fraud, even though he acknowledged it gets blowback.
And his time commitment there.
He said the major slug of work is mostly done. And starting in May, his time on DOGE should decrease significantly, freeing him up more for Tesla.
But still involves somewhat.
Yeah, expects to stay involved at a lower level for the rest of this presidential term.
Interesting. He also seemed keen to address the company's health. Said they're not in a near-death experience right now.
He explicitly said that, yeah. Acknowledged past close calls, but stated they're not in that situation now. His optimism seemed, extremely high.
Based on?
Fundamentally, it comes down to two things for him. Large-scale autonomous cars and vast numbers of Optimus robots.
And he repeated that claim about becoming the most valuable company.
He did. Potentially worth more than the next 5 combined, he thinks. But, and it's a big but, contingent on excellent execution.
Execution is key. Okay, autonomy. Big promises there. What's the latest timeline?
They're expecting to have fully autonomous paid rides happening in Model Ys in Austin, starting in June.
June? That's soon.
Very soon. And the plan isn't just Austin specific. They're developing a general solution so they can scale it broadly wherever regulations allow.
And when do they see this actually hitting the bottom line? Material financial impact?
They're looking at around the middle to the second half of next year for that, followed by, in their words, exponential growth.
Okay. And they clarified the Robotaxi versus Cybercab thing.
Yeah, basically, Robotaxi is just any autonomous Tesla S3, X, or Y. The Austin launch will use existing Model Ys. Cybercab is a specific future product they're designing.
Got it. What about Optimus, the robot?
Sounds like significant progress there, too. They expect, get this, thousands of Optimus robots working in Tesla factories by the end of this year.
Thousands. Wow.
Yeah. And Musk's projection for scaling production, potentially 1 million units a year around 2029, 2030. Faster, he said, than basically any product ramp in history.
That's ambitious. Any roadblocks mentioned?
Some supply chain challenges, yeah. Specifically, getting export licenses for certain magnets they need from China.
Okay. Shifting gears to the energy business again. Megapack seems like a real bright spot.
Definitely. Huge orders coming in from utilities. It really helps grids use their existing capacity better. They see stationary storage scaling to terawatt levels eventually.
And Powerwall 3 for homes.
Good customer reception, apparently, but supply is constrained right now. They can't make enough yet.
Right. Let's talk manufacturing and supply chain localization. That seems like a big strategic push.
It is. They've been working hard on localizing supply chains, aiming for continent-based supply where the cars are actually built, reduces costs, reduces logistics risks.
And puts them in a better position regarding tariffs, presumably.
Somewhat, yeah, compared to competitors, maybe. Their North American cars have over 85% USMCA content, Shanghai cars over 95% local content.
But tariffs still have an impact.
Oh, for sure. Especially on LFP battery cells they source from China, mainly for the energy business right now. And also on capital equipment, the machines they need to build the factories often come from China.
So what are they doing about the LFP cells?
They're commissioning local LFP battery cell manufacturing here in the US to address that.
What was Musk's general take on tariffs?
His view is, lower tariffs are generally better for prosperity. But he acknowledged it's the president's decision, said Tesla will keep advocating for lower tariffs.
And the specific impact. Section 232, auto tariffs.
Estimated around a couple of $1,000s per vehicle hit to profitability. But again, the bigger tariff impact right now seems to be on the energy business because of those Chinese LFP cells and on their capital spending for equipment.
Okay. Can we talk about the unboxed manufacturing method? Sounds pretty radical.
It really does. It's the basis for Cybertruck manufacturing. The whole idea is super low production costs, high automation.
How does it work, basically?
It involves bringing together these large pre-made sub-assemblies and marrying them precisely. They said it's past early crash testing.
And the timeline.
Full-scale integration testing is happening this quarter. They expect test vehicles using this method on roads in a couple of months. The ultimate goal.
This is wild. A cycle time of 1 unit every 5 seconds or less.
5 seconds. Wow, okay. So with all the global economic uncertainty, how are they trying to stay flexible?
A lot of it goes back to regionalizing part supply. And their vertical integration, they're building lithium and cathode refineries in the US, for example, much more integrated than most car companies.
It's sourcing?
Every component is multi-sourced from at least 2 different countries. So they have options. Battery cells for vehicles aren't currently a constraint, they said. But again, energy storage has those tariff issues.
Right. Let's circle back to the FSD unsupervised launch. Austin in June, using current Model Ys.
Yep. Focusing on solving the specific issues for Austin first. Then, the plan is to expand FSD unsupervised for personal use in other U.S. cities later this year. What's the trigger for wider rollout?
The big goal is proving it's definitively safer than a human driver before they let it loose everywhere. The initial Austin fleet might be small, like 10, 20 cars, but they plan to scale quickly if it goes well.
And how do they see themselves versus competitors in autonomy?
Musk remains very confident in their pure AI camera-based approach, thinks it's way better and much cheaper than competitors using expensive sensor suites like LiDAR. He basically said he doesn't see anyone close to competing with them right now.
Okay. What about those affordable models? What's the strategy there?
The focus seems to be less on a totally new platform right away and more on leveraging their existing production lines to get costs down. Low cost of ownership, low monthly payments. The design will be constrained by what they can build efficiently now.
And FSD pricing. Any hints about changes?
They're thinking about multi-tiered pricing. Maybe unsupervised FSD costs more than the current supervised version. They see the current price as very cheap for what it offers, like a personal chauffeur. The value explodes, they think, when you truly don't need to pay attention.
Makes sense. Any updates on entering India?
They're working on it, called it a very hot market, big middle class, but those high tariffs, 70% import tax plus another 30% luxury tax are a major hurdle.
Ouch. He also addressed concerns about the vision-only system, right? Things like sun glare, fog.
Yeah, he got a bit technical. Said they use direct photon counting in the cameras, bypassing the normal image processor. Claims this lets them see better in tricky conditions than human eyes sometimes.
Interesting. And finally, China versus the US in AI development.
Musk thinks China is way ahead in drone manufacturing and supply chains. But in humanoid robots, he's confident Tesla is #1 globally right now, though he expects strong competition from Chinese companies moving up the ranks quickly.
Okay, fascinating stuff. Let's move to our This Is Not Financial Advice segment. Got any outrageous but plausible trade ideas based on all this?
All right, here's one to chew on. Given Tesla's big push for lowest cost per kilowatt hour batteries, really leaning into vertical integration, lithium refining in Texas, maybe consider a long position in a company that makes highly specialized advanced robotic arms and automation systems specifically for battery production and material handling.
Okay, the thesis being.
The thesis is, if Tesla pulls off this aggressive cost reduction and scales in-house battery making, they'll need incredibly sophisticated automation, and maybe others will follow suit. So the companies providing those niche robots could see a boom. Highly speculative, depends on Tesla's execution, obviously.
Right, totally speculative. Got another one.
Okay, second idea. Thinking about the Austin Robotaxi launch in June and the scaling plans. Maybe look at companies providing super advanced mapping and real-time 3D environment data. Stuff optimized specifically for autonomous cars in complex city environments.
Why that's specific?
Well, the argument is that deploying robotaxi successfully, especially at scale, will absolutely depend on maps that are way beyond current navigation. Highly accurate, constantly updated 3D maps, these specialized mapping companies could become like essential infrastructure providers for autonomy. Again, super speculative, relies on the tech working, regulations allowing it, the whole 9 yards.
Got it. Both definitely fit the outrageous but plausible category. All right, that wraps up our Talk Ticker's deep dive into Tesla's Q1 2025 earnings call.
Yeah, we covered a lot. Autonomy timelines, Optimus progress, manufacturing stuff, tariffs, global strategy.
Hopefully this gives you a clearer picture of Tesla's current landscape and their future trajectory, at least as they presented it.
As always, remember this is just our breakdown. Definitely do your own research and analysis.
Absolutely. Thanks for tuning in, and join us next time on Talk Tickers for another earnings call breakdown.